Let's talk about menu pricing, not just food costs, but how your menu prices impact your profit or they create a loss. Details matter in our business all the way down to the penny, because a 1-cent mistake on a very popular item adds up to thousands of dollars for a food truck that's just doing average sales. Welcome to the 10-Minute Food Truck Training Podcast. My name is Bill Moore. I am a food truck business coach, author of 5 food truck vending books, including Food Truck 101 and Food Truck 201. This podcast is all about helping you start and grow your food truck business. This episode is being sponsored by our friends at Table Needs. If you're a food truck owner searching for a simple yet powerful system to run your food truck business, let me tell you about Table Needs. Table Needs is the complete package, offering a robust point-of-sale system with baked-in QR code menu ordering, a KDS, and automated sales tax, plus hands-on customer support that works with you to help you grow your business. For more information, visit tableneeds.com or find them on Facebook. Now on with today's topic. The second most popular question in all of our Facebook groups has to do with menus and pricing. And before I answer the question, let me tell you what the answer is not. 3 times cost, 33%. That's old news. It's like 1980s old news. I've said this at least 100 times on this podcast and probably several hundred times on the Facebook group. Modern QSRs, and a QSR is a quick service restaurant, and that's the closest analog we have to a food truck. Most of them run between 25 to 28%, and many of those are less than 25% in states where the minimum wage is higher. So let's take a simple product like a hot dog. We're going to have a bun, a hot dog, mustard, onions, a wrapper, a bag, and some napkins. 7 items that must be accounted for in the overall food cost. Some people are saying, but labor, propane, gasoline, overhead. How do I cover all those expenses? Because amateurs are telling me how to do my food cost. Food cost is food cost. I include the paper products in it because I don't want to make it too complicated on people. Everything we sell is to go. We know exactly how it's going to be packaged, so just include that in your food cost. That's why I said bags and napkins and wrappers. Whenever we do food costs, whenever we talk about pricing a menu, I recommend that people start at 25% food cost. People don't listen to anything beyond that number, and they start with their arguments on this doesn't work, this doesn't work, this doesn't work. 25% food cost is your overall food cost goal for the whole menu, which means some products will be higher, some products will be lower. That's what an average does. It takes the difference in between the high and the low and gives you a number in the middle. 25% should be your average food cost across your entire menu. Now, how does that cover labor? And how does that cover overhead? And how does that cover gasoline? Real simple. You take $1. Every dollar coming in, 25% of it is going out. So 25 cents of that dollar is paying for the food and paying for the paper. That leaves 75 cents to pay for all your other bills. Your labor, your propane, your gasoline, all your fixed costs, your insurance, your cell phone. 75 cents to pay for it. If you cannot make money with 75% gross profit, you got problems. And it ain't your menu prices. It's controlling your expenses. So, how do you know if that 25% food cost is going to make you money? You got to know the break-even point for your business. So you take that 25% food cost, and it's going to be plugged into a break-even point. Break-even is 2 expenses. You're going, Bill, but I have this and this and this. Yes, and they all fall into 2 categories. One expense is known as fixed, which means you pay the exact same amount or pretty darn close to the exact same amount every single month that goes by, whether you're open or whether you're closed. Your insurance, any loan payments, your commissary, those are fixed expenses. They expect you to pay them, whether you're open or closed. Then you have variable expenses. They only change when you're open. If you're not open, you're not having an expense. So if you're not open, you're not buying food to sell because you're not open. So you don't need to buy food. That's a variable expense. And how you figure break even is you take 100% minus the total of all your variable expenses. So in this example, I am just going to take 25% food costs as being your only variable expense. Then I'm going to explain to you what happens to your food cost when you listen to people that say 33%. So the break-even cost the break-even food cost, the number that we're putting into that break-even point, is technically your recipe cost, because you sat at the kitchen table, you've been figuring out all your ingredients and how they work within your recipes, and then you figure out what it costs you per item you're going to be putting on your menu. This is a recipe cost, or known as a recipe cost. It is perfection. There's no waste, nothing wrong with it. But I want you to understand this recipe cost is not your food cost. We'll talk about real food cost in a minute. This recipe cost is going into a variable expense for your break-even point. Once you put that in and you have done all the math, it'll give you a number. If that number is too high or too low, you got a couple questions to ask yourself. So for ease of math, we're going to call our daily fixed cost, the ones that we have to pay every single day, whether we're open or closed, $200. And then again, the only variable cost we're going to have is food for right now, just to make it simple math. So you take 200 divided by, again, 100% minus 25%, which is 75, means you would need $266.66 daily sales to pay all the bills. Now the question becomes, can you generate $267 a day, rounding it up? And then to get an answer to that question, we talk about marketing. If you're concerned the break-even point is too high, if you don't feel like you can bring in that $267, then something has to change. Fixed costs can't change because they're fixed. The only thing that can change is your variable cost. So we're talking about your food cost. How do we change the food cost? You do it by changing your menu prices. The higher the menu price, the lower the food cost goes. The lower the food cost goes, the lower your break-even point. Amazing that people want to start at a 33% food cost, because that means your daily break-even point is higher than if you're at 25%. So just to show you the impact, I already told you it was $267 to break even if your daily fixed cost was $200 and all you have in variable cost is that 25% food cost. So let's just say same numbers except you have a 33% food cost. Your break-even point now is $298.50. That's $31.84 difference every single day that you're open. If you're only open 200 days a year, that comes out to $6,368 difference just by running a higher food cost. So every time you hear someone say 33%, ask them why they don't like you. Ask them why they want you to have to run a higher break-even point. So when we're dreaming of opening a food truck, we're sitting at the kitchen table. We are figuring the first of 4 different food costs. I already told you recipe cost. That's the one you're working on if you have not opened yet. And the goal is to put that recipe cost into your break-even point. Okay, so let's go back to that example of a bun, of the hot dog, mustard, onions, wrapper, bag, and napkins. And we'll just say that costs $1. Okay, so you have a $1 cost. To get a 25% overall food cost, you divide $1 by 25%. That yields a $4 menu price, which means you're going to put $4 on your menu. But now you've got a question tree to follow. The first question is, will your market accept that price? If you say yes, they will, then you move on to question number 2. If the answer to will your market accept that price is no, then you got to either decrease the menu price, change your recipe, or do something to get it down to where they will accept your menu price. Once you get that, yes, they'll accept the menu price, you move on to question 2. The question number 2 is, will the profit this menu price generates make you happy? If you say yes, there's your price. If you say no, you either start all over with a new price and answer both questions until you get a yes, or you modify your recipe, you modify your ingredients, you change suppliers, you figure out a way to make the product cheaper so that you can get a price that the public will accept and you'll be happy with the profit. You do that for every single product on your menu. Once it's complete, your next task is to estimate the sales mix for each product. So think out of 100 people coming up to your food truck, how many are going to buy this product? How many are going to buy that product? And how many are going to buy that other product? Yes, it's a guessing game. Yes, it's an estimate, but we got to start somewhere. Now, if you're using my food cost spreadsheet, there's a tab on there that will help you do this. And it'll give you what's known as a theoretical food cost. It takes that sales mix of all the different products. Somebody buying 30 of this and someone else buying 20 of this and somebody else buying 40 of this. And that gives you a sales mix, weighted food cost. This would be your theoretical. If you sold those exact products and the recipe was hit perfectly every time the product was made, you would have that theoretical food cost. Just remember, the recipe cost when you're sitting down at your kitchen table and theoretical food costs, they are perfection. But now we got to add in the human element, and then perfection ceases to be possible. We're now talking about actual food costs. Food trucks open and you actually are making sales. You're making food. The actual food cost will never be theoretical, will never be your recipe. Actual food cost is an accounting formula. It's one of those boring things that accountants are going to teach you. In its most basic form, opening inventory dollars plus purchase dollars minus ending inventory dollars. This is how much money of your inventory you used. This number is divided by the sales it took to generate that food cost. So if you're talking about a 1 week measurement, then you're looking at the sales for 1 week. That gives you a percentage. When you divide that dollar amount by the sales, it gives you a percentage. That gives you your actual food cost percentage. Now you got to take the wasted food dollars that you should be tracking and then divide that by your sales to get a waste percentage. This waste percentage would be added to your theoretical food cost, and then you can compare numbers. At that point, the theoretical food cost plus the waste should be your actual food cost. If it's not, if your actual food cost is higher, you have a theft problem, you have an unaccounted for waste problem, you have a free food problem. Each dollar this is off comes directly out of your wallet. How does that make you feel? If your food cost is lower, then you've got a recipe problem. The portions written down on the recipe cost are not being used. Basically, you're cheating the guests out of the portion, out of the flavor that you promised on those recipes. Either way, your business is in trouble. One way impacts your cash flow, the other one impacts your guest flow. Food cost is not one of those one and done exercises. It's a daily job. You have to be frugal. You have to prep precisely. You have to follow recipes to a T. Just because you wrote them doesn't mean they shouldn't be laying in front of you when you're going to produce whatever the recipe expects you to produce. I said 4 food costs. So far I've only mentioned 3. That was recipe, theoretical, and actual. This 4th food cost impacts your bank account directly. And this will be the one everybody knows, your food expense. Food expense is what you spend on food when you go to the store, when you order from Sysco, when you go to Restaurant Depot. It does not account for the food that's on the truck or at your commissary. It's just what you spent. Let's say you ordered $800 from Sysco and you pay Sysco $800. In general, if you're controlling your inventory level on the truck and doing it precisely, that means that $800 should be replacing $800 worth of food that you sold last week. Meaning this new $800 should cover your projected sales for the week coming up, or until you go shopping again, whichever comes first. So if your theoretical food cost is running 25%, for easy math, that means you are projecting that $800 to generate about $3,200 in sales. How I figured that was taking 800 divided by 0.25, 25. And that tells me $3,200. So if you hit $3,200 in sales and your ending inventory is very, very close to the inventory from last week as far as dollar amounts go, you did awesome. But if you didn't hit your $3,200 and your ending inventory is the same as last week, what do you think? I'll give you a second to figure that one out. You didn't hit $3,200. Your inventory is nearly identical from last week to this week, but you did use all $800 you bought. Is there a problem? Is there not a problem? There is a problem. You bought $800, therefore it should have lasted about $3,200 worth of sales. If it does not, and your inventory did not increase this week to last week, meaning you have more food left over today than you did last week, that means you sent out more food in some manner than you should have. It was either free, it was either stolen, it was never received, meaning Sysco didn't deliver everything, you overportioned, or you didn't account for all the waste. All of those things add up to a big food cost problem. So I started with, let's talk about pricing. Pricing's simple. What do you want your food cost to be overall? There's your starting point. If you want it to be 25%, just divide the cost of the item by 25%. That's 0.25 when you put it in a calculator. But the real trick to controlling your food cost and the real trick to putting money in the bank is understanding those different ways of measuring food costs that I just talked about. Thank you so much for listening to the 10-Minute Food Truck Training Podcast. If you're finding all the information helpful to your food truck business, please become a monthly supporter of the podcast. Just hit the support button or follow the link in the description. Every little bit does help keep us going. Join our Facebook group. It's called Food Truck Training. We have a whole bunch of awesome members at all different levels, from brand new beginners to decades-old veterans. They've all got your back when it comes to helping you with your food truck. And again, thank you for listening. Come back tomorrow because I got plenty more to say when it comes to helping you and your food truck business grow.